Okay, folks, welcome to the Contrarian Trader. Happy 2015. And tonight's focus stock is going to be Facebook. I did a video a couple of weeks back on Facebook where I predicted that it was going to rally and that it would break out, and it did. However, an event occurred. And one thing I always coach my members on is the character, the health of a breakout. Meaning, when a stock breaks out, does it consolidate along where its prior resistance level was? And that resistance level should now act as support? Or B, does it continue higher, which is fine as well? That shows it's under accumulation, as long as you see strong volume bars, as you saw back here. However, another event occurred, and it's not a good event. We had our breakout, and the following day, the stock rolled back over into its prior trading range. That is called a breakout point failure. That is never a good thing unless you're short of a stock. Now, when you're looking at today's price action, you can see that we found some support at $78 per share. No shock there because we had support back here on November the 28th, right near its prior resistance level. So technically it held up well today, inside day. And my guess is that they're going to try and rally Facebook once again, especially with silly season upon us. What's silly season? Great question. Silly season is earnings season. It's just before and right at the beginning of when earnings are released. Now, what CNBC and the media won't tell you is that as these stocks are beating by a penny, that of the 108 companies that have already revised their guidance for Q4, 84 of them revised down. They don't want you to know that. All they want you to know is that XYZ company beat by a penny, and they want you to applaud. They want you to get excited and go running in and buying stock. We do not do that. What we want to do is we want to focus on the stock chart. The charts will tell us everything we need to know about the behavior and the probability of the stock moving higher or lower. Now, in this case, with this, I wouldn't quite call this today's candlestick a doji star. It needs to be more of a tighter opening close, net on the day, and more in the center of the day's trading range. And we don't have that. So it's somewhat of a bullish day. We closed up, always good. And we close off the lows of the day, always good if you're long. Now, what you want to watch for is a continuation move higher up to this resistance level, which should have acted as support after this breakout. The question then becomes, do we break out or do we roll over and put in a lower high? And if that's the case, this right here, today's lows, needs to be a stop loss point. Now, I am in the camp of not being all that bullish on Facebook any longer due to the fact that in the case of Facebook, I am using both daily and weekly charts to do my analysis. And on a weekly basis, let's take a quick look at it. We had a breakout point failure. Note, just as I mentioned on the daily chart, we broke out on Facebook out of a weekly consolidation the week of December the 15th. We broke out, closed above, gapped higher the following week, flashed a topping tail. That's a sign that sellers came in late in the week and sold it off of its highs of the week. Not a good sign. Doesn't mean it's a death knell for the stock. It could continue higher, especially during a holiday season. A lot of volatility, a lot of upward movement on light volume. However, we didn't get that. We saw Facebook break down and into its prior trading range. So it did it on a daily and on a weekly chart. So my position is this. I am willing to go long or short of Facebook depending upon its price action. I'm an opportunist. I'm a capitalist. I'm not in love with the stock. I love the company. I love its product. I think it's great. That being said, the behavior of the stock price is not living up to a stock that is poised for a continuation move higher. In fact, weekly chart, take a look at your RSI. It broke down below its lower band the week of October the 27th. It pulled back, managed to recapture the lower band the week of the 22nd, and now this week we closed back down below this key support level. The RSI is not like your MACD, your MACD. It's not a lagging indicator. It's a leading oscillator. And this is not a good sign. This is indicative of an oscillator leading price performance. So while on a daily chart, we might see a short-term rally up to this resistance level, the question is, will it hold? I always put the stock to a test. And the test is always at the top. The test is not down here. The test is up here. When you're looking at a stock to buy it long, the test is, can it break out to new all-time highs? Is there sufficient demand for the stock to push it to all-time highs? Or does it roll over and put in a lower high, meaning that there's insufficient demand, the stock is weak, and if you get a breakdown below these key support levels, the stock could quite very well be a short. So to summarize, I think that we're going to probably rally early next week on Facebook. The question then becomes, do we break out? Or do we look to short on topping action and what could be a lower high? And that's it, folks. Enter your email address if you want these videos in the future. We do not spam. We hate spam too. Members, stay tuned for Saturday's Market Pulse Check video. That's where we review the health of the overall markets. And also on Sunday, I send out to members the Focus Stock Analysis video. That's where we do some technical analysis of stocks that we're watching, as well as we review positions that we're currently holding. And everybody have a great weekend and have a very profitable 2015. I'll talk to you soon. Be well.